Welcome into the live stream today, and we are going to, of course, take a look at Bitcoin, the volatility that is happening. Whales are jumping in. There is a lot happening in the market. We'll break it all down for you. My name is Paul Barron. Welcome back into Tech Path. We are live streaming today, both on X and on YouTube. So wherever you're watching this, make sure, of course, and follow us if you're over on X. And of course, if you're here on YouTube, first thing I ask you guys to do is subscribe. By the way, we have a big live stream coming up on November 5th, election night. We'll be streaming live from 6 p.m. until who knows when. Hopefully we'll be able to get full coverage of election night. We've got a whole lineup of guests. We've got analysts on. We'll be doing some crypto trades, looking at what's happening within the market. So make sure and earmark that over on the YouTube channel right there. You can go in and, of course, have it notify you guys when we go live. So check it out. Hit that little bell, you get those notifications. I do want to thank our sponsor today, and that is Coinbase. Coinbase is the future of money. And of course, one of the things you guys can do by joining Coinbase is start your journey. Maybe you're brand new to crypto, or maybe you have been around a while and you're going to try another exchange or two. Well, Coinbase is a place to check out. Go to coinbase.com. Use our link down below. It does get you $200 in crypto to get started. And of course, you guys can begin going into crypto. A lot of things going on right now in the markets. September PCE inflation coming in. Fed's preferred inflation measure falls to 2.1, in line with the 2.1 expectation. Let me kind of zoom in on that for you guys a little bit there. Core PCE inflation unchanged at 2.7, above the expectations of 2.6. Not too much there, but it's been 6 months since core PCE has fallen. That is the real question mark of, did we really need the 50 basis points? And I think that's where the market is right now. They are a little bit irked with where Powell has come from. If you look at Truflation, it looks a little bit more telling here because of the bounce that we saw right here mid-September, and we have been climbing as we see more and more inflation pressure holding that position. And of course, I think this was just a small hiccup, and we may be on our way back to climbing inflation. So that's the real question mark here, I think, because that will potentially slow down how the Fed responds next week on the FOMC meeting and how they may adjust against what the rate cut, if we even get a rate cut. This will be interesting to see. Make sure and drop some questions in over on the side. We'll try to get to as many as we can for you guys. We'll do some Q&A. One thing to consider is, and I think this is something that people look at, well, what's the state of the economy? If you look at the consumer spending for the holiday preview, people are still saying that we're going to see a little bit of activity around consumers continuing to spend. I think, and this is something we were kind of talking about today, I think they're going to go ahead and max out the credit card the rest of the way and go ahead and take care of the kids and the families. But this could have long-term impacts in 2025, trying to basically reposition the consumer, when you look at recovery off of these credit exposures that are going to be for, I think, for some time to come. 2025 may not be the end of it. So that's another factor, which is a little troublesome because that means that we may not get as many retail investors coming in during a massive bull run, unless you get some new credit cards. I want to go to a clip talking about consumer headwinds. Listen in.
The fact that wage and salary growth is now outpacing inflation. What does that say to you about this upcoming holiday season?
Well, it has been actually outpacing for quite some time, and I think that's going to help the consumer, although those prices are still, quite elevated. While inflation is coming down, it isn't declining. It's just more of a disinflation type category. But the salaries have been actually continue to be quite robust. I think that will bode well for the monies that consumers have to be able to spend. Inflation, as it does indeed decline a little bit, it will provide the real spending is actually quite strong. And we could actually see more people in terms of selling, going to the store, for example, more foot traffic to those that go into the stores.
So interesting component there, and that is the wage, salary, and what we'll see around job loss, because there has still been a decline in the number of jobs available. Job reports coming in will be, I think, a big factor more toward the end of the year when we start to see that data coming in. But you have to be considerate of what this means to the market. And I think everybody is experiencing that today. as Bitcoin comes back down to 70K after almost clipping into 73. Bitcoin wipes 500 million in open interest as Bitcoin price drops towards 70K key price point. And I think a lot of people, and remember, shorts have been liquidated over this week. Now you're getting longs that are getting liquidated. This is how a volatile market works. And this is one of the things you've got to watch out for, especially going into an election that is going to be very, very volatile, of course. Fed pivot is also being delayed again. Fed watch tool shows markets bet on change data after the latest 96% odds of a quarter cut next week. We'll see if that happens. Real chance of volatility could come with U.S. non-farm payrolls. That's what I was talking about, is that the data coming in on jobs is the key one. Do we see that really being the biggest issue going forward? But a lot of people, they're still looking at this week for more information and more data. Hours go until we see the October candle close, but Bitcoin remained up for about 13% month to date. That's still a good sign for Bitcoin. So it was October overall, but is it continuing to be up November, or do we get kind of a sideways function right now? With all of that being said, the big guys are still executing. BlackRock bought another 12,000 Bitcoin. BlackRock currently holds about 430,000. And the numbers just keep climbing. And when you combine all of that out of Wall Street, they have now done it. They have now surpassed Satoshi Nakamoto, as Wall Street's ETFs now hold more Bitcoin out there at over 1 million Bitcoins. So kind of crazy. Pretty crazy stuff out there in terms of the growth. Another thing that is getting into this is after the Bitcoin price broke through at 71, there was a little bit of movement. We had 749 move. It woke up after a very long dormancy. Man, this guy took some profits and now gets to pay some taxes, most likely, unless it's international. Whale accumulated 749, 81.51 at the time. Wow, great buy. In 2012, and then the price was at $11. This is crazy, the amount of movement. So it's interesting too. I just wonder if we're going to start seeing a lot of these legendary wallets wake up during this bull run and start to just take profits left and right. That will be an intriguing one, and actually get to take profits from a hedge fund. You got to love that. You got to love that. Whale transfer also has been recently made over to Coinbase, and this one is a bit bigger, 8,000 Bitcoin. So significant enough, I think, to get people to pay attention. So it is one thing that you have to look at, though, when you just follow the whale moves that are out there. There's several Twitter accounts out there. There's several platforms where you can check a lot of these, whale activities. And that's what we do, but most of the time, crypto Twitter is the best. By the way, for those of you guys catching us over on X right now, if you want to ask some questions, flip over to YouTube. We are taking questions over there. So if you are catching this over on X, do that if you have a question or two. Or you can just DM questions over to me either way. I can't do them live, of course, but I'll try to get to them later today. Bitcoin institutional demand in custodial wallets is rising. Over the past year, 278,000 Bitcoin flowed into US spot ETFs, about 80% versus retail. This is the thing that we've talked about many times, is that retail is the factor that is missing right now in this bull run. And I think that's why you're seeing a lot of the moves we're seeing right now, which is kind of these attempted all-time highs and then regressions. This is typically how trades work, where a lot of big money goes into the market. Michael Saylor's MicroStrategy plans to raise another $42 billion. That's right, I said billion, to buy more Bitcoin over the next 3 years. So these guys continue to zone in on how do they run against where the potential is going to go. Now, I look at this and I think over the next 3 years, does this mean that Bitcoin could be on a much less volatile movement? In other words, those big retraces downward, less retrace downward, but less upside long term. Because remember, all you have to do is really outperform the S&P. S&P, anywhere between 8 to 13% would be superior. So if Bitcoin actually comes in on 20% annual, or even say 25 to 40% over a 3-year run, I mean, then you've got a situation where Saylor just looks like he's brilliant. So pretty cool. Most recent previous disclosure was mid-September. They announced the 7,400 purchase, and then they brought its holdings to around 250,000 Bitcoin. So they're way behind the big boys right now, but starting to move in. So definitely. We will take out, I'll take a look at some of the charts. I mean, everything's pretty much in the red today right now. I think adjusting prior to the election. Here it is Thursday. Do we get a weekend run is the real question here. I think everybody's still a little bit gun shy right now because of the election being so tight. And yes, this election will have a lot of implications, both good and bad on both sides for crypto. But the good thing is that I think globally, we've got to be thinking about really trying to align with what's happening in Europe and in Asia for sure. Saylor goes a little bit further into his conversation on the topic of them being in a very unique position. Take a look.
As I said, I think our company's misunderstood, and I also think it's undervalued. I think, as you can see from our performance so far and the 21-21 plan, those concerns are unfounded. I'm going to wade into the big premium debate here, like what's the appropriate premium for net asset against net asset value of MicroStrategy. And I just want to make one obvious point. We're a growth company. We're a Bitcoin treasury company, and we are growing. We are built on an asset, Bitcoin, which is growing 50% a year. And we are growing with that asset. And in that regard, we are the leader. Nobody else has $18 billion of permanent capital. In order to create a company like ours, you're going to have to actually go 100% all Bitcoin, And how do you do that at our scale? If you do it with, a big tech company, they'll never be 100% Bitcoin because they got too much other stuff in their enterprise. And if you do it with a $1 billion company, they're not going to catch us because, as you could see, we're not slowing down. We're actually going to target $10 billion of capital next year. So unless you're going to target $42 billion of capital in the next 3 years, then MicroStrategy is kind of in a unique position.
Okay, so I understand where Saylor is. I mean, we've had him on the show in their early days. Remember, MicroStrategy was a software company at one time, and really now more. He is right. I think they're much more of a Bitcoin asset holder. So the concept here is pretty simple. He's been buying Bitcoin when everybody else was saying, don't buy digital assets. That's always going to have a big run-up. But if you look at Metcalfe's law, you look at the bell curves of adoption, the next big moves are not coming from guys he's been competing against over the past 3 years. He is going to be competing against the biggest asset managers, not in the US, in the world. So I don't know. I think there's still some companies out there that could track him down and still outperform by just committing. Because all it takes, really guys, all it takes is finally for a stablecoin bill to be in place for the US, dodge a CBDC thing, and I'll talk about that in a second, and a potential scenario where we see an explosion of adoption. Either one of those things, and I think all of those things are most likely going to happen. Then I think, yeah, you're going to see someone, now is it a Meta or an Apple or a Tesla or someone else? I wouldn't be even worried about that. Let's just go to Saudi Arabia, Qatar, most of the nation states. All of them are going to figure out a way to go in this direction. Be concerned about how BRICS plays this out. So I don't know. I'm not just saying that he won't be the best. He'll be one of the best out there, but I don't think he's going to be the only one. So I think, yes, people can catch him. Don't forget, a couple of questions in over the side. I see a few coming in, but guess what? You have Janet Yellen now and the U.S. Treasury saying, hey, stablecoins should be replaced by CBDC. So here's what's happening. They're finding out that all these Treasury bills are being backed by these stablecoins or vice versa, and they're realizing, oh, wait, there's a whole lot of liquid out here. We need now to control this. So we've already seen the threat, and I think finally the government is waking up to what the digital asset can truly be. And that's the big pullback, I think, that we're going to see here. So Privately issued wildcat currencies were replaced by government-backed central currencies in the late 1800s. That was an interesting point. CBDC will likely need to replace stablecoins as the primary form of digital currency underpinning the tokenized transactions. This is crazy for them to go this direction, but the Treasury estimates 120 billion worth of T-bills have been purchased to serve as yield-bearing for stablecoin collateral. It's like one of the best things. So not only do they want to supply, they also want to control instead of just letting these free markets work. Because this is what got us in trouble with BRICS. I think that's another factor that plays into this. But 81 billion now has been purchased by Tether alone out there in terms of this. Remember, be careful, because if it does start to pivot quickly to a gold standard, it's very possible you could see a lot of these stable coins flipping into gold securities versus what we've seen with T-bills and other, commercial paper out there for sure. Look at the other statements here. Wednesday, they had the report fixated on a common occurrence, stablecoins depegging or collapsing. Not true. Yes, there are destabilized scenarios, but most of it's because of regulation scenarios that play out, and that's what we're facing right now. Treasury believes it could lead to disaster if T-bills become increasingly integrated with stablecoin industry. I don't think so. I think this is now starting to just solidify what we truly need, and that is a decentralized form of reserve capital. Treasury Department estimates about 80% of all crypto transactions involve stablecoin. Yeah, that's right. And the growth is going to continue in that direction now that you've got the rest of the world combining in on this and coming in to what we will see, which is next generation money, people, next generation money. Stablecoin issuers are the 18th largest holder of U.S. debt in the world. 18th largest right now, in a market that is a fraction of where it will be in terms of digital assets. Imagine where gold is right now. It's probably still 10x that of just digital assets. And if digital assets become tokenized, we get into tokenized securities, real world assets start playing into this, gold easily within the next 5 years. So you can imagine where you'd be going up in terms of holders of treasuries versus stablecoins at that time. Here is a clip that has got Jeremy Allaire a little bit in an uproar about CBDCs. Take a look.
But it's been really interesting to watch. The largest scale experiment in this today is in China. And the ECNY project, which launched many years ago, in fact, now. And the project began actually 10 years ago. That project today has extremely low use, even though China is an all-powerful government. And I think there's a couple things at work here. I think one is that even people in China don't necessarily trust their government. They want an air gap between their wallet and the government, just like we all value privacy and value that intermediation so that the government is not directly in our pocketbook, so to speak. The other is private sector innovation. Anyone who goes to China knows that the private sector has been an extraordinary innovator in the technology of payments and the technology of moving money.
I think he's right there. And, there's a lot of states here in the U.S. that are trying to protect against this. It's interesting to me because you're getting into a scenario where stable is now starting to compete against, as our team said, is against top foreign holders, out there. So look at where BRICS could be, 36 countries right now. In another year, that's going to go to plus 40, maybe in the next 18 months. We could see 45 countries lining up against the Western worlds. And that, of course, would dwarf the G7 and also would open up new economic centers around the planet. So there's a lot happening right now of how stablecoins are going to be a huge part of this. Now, remember, all we need is a stablecoin bill to really jettison, I think, the U.S. economy, especially when it comes to crypto, into the next level. He goes further into this same conversation here, and he's talking about the Fed upgrading their infrastructure and how they could do it the right way. Take a look.
And so I think there's going to be a need for private sector-led innovation in technology, which is if you think about the West leads through free markets, through fair and clear rules and regulations, open competition, and private sector technology innovation. But there is a public-private dimension to this, and so regulation is obviously a key piece of that. And over time, I would like more than anyone else to have the Federal Reserve's core infrastructure upgraded from, the many decades old that core infrastructure is. So we need to improve the core infrastructure, but then we need to, allow intermediation to be led by, the incredibly fast pace of technology innovation that we know from the internet and software and things like that.
So a lot of good statements there, by Saylor. He understands how the infrastructure works, and he definitely understands how the scale of what stablecoins can represent to society can also work. I think the key here with the Fed is, and really for the U.S. government in general, is they really cannot, well, and you say this, they can't get too greedy. They are going to get greedy, yes, of course. Anytime they realize that there is a honeypot sitting out there, which is stablecoins right now, that opens up an opportunity for the Fed to possibly restructure against a CBDC, which then could get into this whole idea of great resets, which is we just need a new way to print more money. That is the thing that we have to be concerned with right now, which is why I hope that we do see more and more pushbacks on CBDCs. This is another factor too, because this gets back to my point, is that the US is lagging behind. Saylor touches on that very point. Take a look.
Do we want dollars to be the currency of the internet, or do we want something else to be the currency of the internet? And right now, in this early market, digital dollars in the form of stablecoins are winning, but that's not to be taken for granted. And I mean, just in recent weeks, even the Russian government has passed laws to adopt, digital currency alternatives to the dollar for settlements with their trading partners. China has been trying to advance their own digital currency model and get buy-in for more and more uses of that. Just as I said earlier, in a world where money moves over the top, where you just need a smartphone or a piece of software to connect to a monetary system, that's all you need. These broad political and economic blocks can connect directly and intermediate and transact. And so it's a very real threat, in my opinion. As one of my colleagues likes to remark, we sit here today and the digital dollar in the form of USDC is regulated by Europe before it's regulated by the United States under MiCA.
Huge statement right there. And this is the concern right now that we are dealing with, is that could you see a shift occur, over the next little bit where, and it's back to the whole BRICS thing. He was kind of alluding to the whole issue with where Russia and the de-dollarization could begin, because it's a slippery slope. Once that you start to see trade transacting in local currencies mixed in with gold, we've done a couple of BRICS interviews on this. I'm going to bring Andy Schechter back to talk about this topic because it's a big one in a way that could impact the U.S. even if the United States does a stablecoin bill that comes through and they truly embrace it. But again, still, we're not really 100% for sure that that's going to occur with obviously what's happening in the elections. If you take a look at the markets right now, there is Bitcoin retracing after that massive candle day we saw on the 29th, down almost 2.5% where it's going. And of course, everything's kind of been following it with it. Solana, of course, had a couple of days down. You look at ETH, which had a massive red candle coming down right there, almost 5.5% down on ETH. We are going to get to some questions here. Just as a big note, Polymarket now has Kamala Harris pumping up in the poll, back almost to 40% here. This is a huge deal because when you look at this, zoom in on this. Let me show you guys something. Look at this move that we've seen just over the last little bit. Now again, Polymarket, and it was interesting. We kind of take these kind of things for granted. We're in crypto, we're kind of in the bubble. I've shown Polymarket to a multitude of people over, and Kalshi, to a multitude of people who are not in this world. The minute they see this, first of all, their minds are blown that these kinds of platforms exist. So the other factor is that they're amazed at the differentiation between these polls. So that's another factor you just have to remember. Crypto and blockchain is the truth. It's kind of like the truth net, which is the next level of what we will see from Web3 for sure. We're going to get some questions. I know we have a poll. Let's go to that real quick. Take a look at the poll today. Bitcoin all-time high by November end. 56% of you are liking November. The turkey is out. And Bitcoin is going to do it. Okay, well, I have to go contrarian, guys. I don't think so. I'm going to go with December as our date because I think we're going to see some volatility on the election side over the next few weeks, possibly the next 30 days. I will be surprised if this goes very smooth, and that in itself will cause some volatility. Now, that could be good for Bitcoin, actually, but it could also be uncertain. Now, the one group that I think will not be uncertain, BlackRock. All these Wall Street types and hedge funds are not going to be uncertain. They're going to be moving full on. Here we go. Meesman says, Master is on its way to becoming part of the S&P 5. Maybe. And the NASDAQ 100, maybe. I mean, you look at it, they could be one of the top, definitely one of the top performers for sure. The Kitten says, hey, again, tell what's wrong with ETH, man. It's so undervalued. All right, so here's the deal with Ethereum. And if you listen to some analysts out there, and you just think of Ethereum as money, the good thing is it's a new kind of money because it doesn't deflate necessarily, but it doesn't inflate. When I say inflate, rise in price dramatically. Now, will ETH continue its move up? Yeah, it's possible. Is it going to be one of the best performing assets in this bull run in terms of percentage? I do not think so. But it is an amazing asset. So I look at it as a core, almost like if you're going to trade on anything out there, you probably are going to trade on a lot of different projects that are utilizing ERC20, which is Ethereum. So remember, USDC, that's an ERC20. So ETH is a requirement, even though Matic, Polygon, God, I got to get used to saying Polygon and Pol, the token. But Polygon, I think, is on the race right now to really change some things. Go back and look at our video we just did. There's some interesting things that are transpiring around Polygon and what might be the future of Ethereum. Just go back and watch the video. We did it a couple days ago. It didn't get a lot of traction because it was kind of a little crazy one, but go check it out. Only regret, I didn't buy more Bitcoin under 20. Yeah, that was, I think that's everybody's regret, for sure. Ripple USD will flip USDC. The key here is you need Ripple to really start to engage, and I think that will happen in a very short period of time. We were at the Swell event. A lot of interesting things happening there. Where do you see ETH in 2025? I think it's going to go up. I don't know that we see a 5x Ethereum, but it's possible. I like Hugo. He says the ETH is going to explode next year. Deaton for Senate. You got just a little bit to do that, and that is to try to get John Deaton to defeat the anti-crypto army in Elizabeth Warren. What do you feel will be effect? Bitcoin more, Elizabeth Warren losing winner, her election, or Trump Harris? Okay, I think I understand this question. What will affect Bitcoin more if this is interesting. You asked that, David. We had the same question. It came in the crypto pit this week in our research. What hits crypto more? If a Harris or a Trump win, I think if it's a Trump win, you're going to have maybe a short-term effect. I don't think that a Harris win hurts crypto, but it's going to take some time to work it out. Now, if you get a Warren loss, that helps crypto in a big way. And I'm convinced that might be the biggest opportunity, even though I was kind of thinking maybe Gensler, if he was somehow dislodged, that might be it. But really, I think it is, you got to go after the Hydra. You got to go after the Hydra. Let's see, Joni says, what with DOT? So Polkadot, interesting stuff, guys. You need to stick around for some of our Polkadot videos that we're going to be doing. There are some intriguing things happening with Polkadot for sure. It gets in pretty deep. Crypto Steve says, what coin currently in the top 15 market cap will drop out and what coin will replace it? Ooh, that's a good question here. Let's go to CoinMarketCap. Take a quick look at our top 15 and let's throw out a few. Okay, Solana's going to stay. XRP is going to stay. I would say it's a fight between Tron and Toncoin. I don't want to say the words Cardano could drop out, but it's possible. Avalanche will definitely stay in there. Chainlink will come up. Polkadot, I think, could rise. SWI is definitely going to be in the top 10. And then beyond that, I would probably have to think Aptos. Maybe not. Uniswap, possibly. Beyond that, I don't know. That's a good question there. Let me think here. I'm going to say Tron. I'm going to say Tron falls out. Now, I know it's huge. I get it. And there's a lot of things that work with Tron. And I'm back and forth on Tron and Toncoin. I don't know. That's a good question there. I think Doge stays. It's the granddaddy. It's going to be there. It's going to be there. Why Bitcoin is so suppressed in real terms, given the ETF activity? Because I think it's real. It's just so simple. Retail's not here, and we haven't seen the full-on effect of a U.S. adoption of crypto. Pretty simple. Until we see that, then boom, you're ready. Everyone needs to be watching Pennsylvania closely. No doubt Pennsylvania goes to Harris, and you don't immediately, he said, immediately leverage short Bitcoin. You will lose all your money. Okay. Well, if it does go to Harris, that means that things are going to be a change in here pretty soon. That is for sure. Which, by the way, guys, guess what you can do? You can go right over and subscribe to our show on election night, and that is Crypto for America. We will be doing a big live stream. We'll have lots of guests. We've got a full-on trading, live trading. We're going to be watching the markets, and of course, we'll be giving you guys full reports. We even may have a secret analyst coming in to help us predict the potential, and he's been tracking these maps for quite some time. So that all is going to be happening next Tuesday on election night, November the 5th at 6 p.m. Eastern time. So make sure and just subscribe to the channel right now. Hit that little bell so it'll notify you when we flick on the live switch next Tuesday. And of course, if you guys aren't following me on X, make sure and do that. It's just @PaulBaron. And we will catch you next time right here on TechPath. See ya. Maybe.